Equities hitting new record highs in trading today, despite disruption from the U.S. government shutdown. We're joined by Carol Schleif, Chief Market Strategist at BMO Private Wealth. Carol, thank you very much indeed for giving us the time. Happy Friday. You say on balance, markets are likely to grind higher.
Yeah. First off, thanks for having me. Happy Friday to you as well. And yeah, it's definitely been a not very loved bull market, if you will, in terms of there's been a lot of skepticism around it. We hear a lot of pushback from clients about valuations, which is understandable because things have been, grinding higher, if you will, as we go through. And for sustainability, that's actually pretty good news, because where you start worrying about sustainability of up moves are when everyone wants in, it's the only game in town, and there's a lot of exuberance around. So not having the exuberance is actually pretty helpful.
The stock market's correlation with the actual economy is notoriously unreliable. But just looking at the economy, you think the Trump administration does want to have good economic numbers for the elections in 2026?
Yeah, they definitely do. The administration and actually both parties really, I mean, it behooves us to have people employed and markets and the economy chugging along, if you will. And so there is a lot of focus there. There's also a lot of focus in the Trump administration and some of the recent moves that have happened there, in terms of the tax law bill is very favorable for businesses, hard coding some really important deductions for research and development and construction activities and plant expansion, things like that, as well as there's a decided aura, if you will, of loosening regulation all the way through, but particularly in the banking sector and the financial services industry, there's a lot of movements made there to be very supportive of economics and business activity. In fact, the piece I wrote this week profiles a bunch of the different things that have gone on that have specifically aided the capital markets, if you will. But it's also important to remember that equity markets are forward-looking mechanisms. So the best set of data we'll have coming out of the U.S. here in the next few weeks is the start of earnings season next week.
We have had quite a few novel ideas from the Trump administration when it comes to Washington's participation in the economy. For example, Nippon Steel poised to buy U.S. steel, but the government gets a golden share. Unusual arrangement like that, for example.
Yeah, there's a lot of unusual arrangements going on. Then there's also the arrangements, if you will, with AMD and NVIDIA, where if they want to sell high-end chips to China, 15% of the revenue they agree to remit to the U.S. government. There's the stake in Intel. There's the Defense Department taking a stake in a minerals miner, or a rare earth miner. And there's announcement after announcement. There have been quite a lot of them. And it's spawning a lot of interesting things. We also had a Genius Act passed, which put framework around cryptocurrency and stablecoin. We've had an executive order signed asking the Labor Department to look into its rules around originally prohibiting, but wanting to loosen those rules to allow access to alternatives in retirement funds. So there's a lot of things going on underneath the hood, and not so much under the hood, that the government's trying to dabble, if you will, in a lot of different aspects of the capital markets.
What about bonds? Are you attracted by bonds at the current yields, Carol?
Bonds offer some really nice stability in portfolios, and especially for those clients that have a balanced viewpoint, it's a nice way to potentially level out, if you will, some of the volatility in the stock market, because you've had balanced portfolios overall have done a really nice job this year at cushioning when you had some of that volatility, particularly earlier in the year. And bond investors operate out of a different mindset, if you will, especially in the intermediate and longer end, in terms of keeping an eye on government to make sure it's not overspending or making plans to overspend even more, because we are overspending. So there's a lot of interesting reasons to have them in a portfolio, because they do provide that stability to help help offset some of the volatility that can come from stocks.
Give us a final thought, Carol. Do you feel it's overdone, the massive investment in AI powered or AI oriented data centers?
It's really important to watch. So far, the build out in that capital infrastructure there has been funded from cash flow and other businesses at the companies themselves. It's not like it's debt funded or public funded. So it's very important to watch that. We're seeing some of the new deals come from debt funding, but it's also important to remember in this capital build out, when they're buying things like chips, the new tax law allows them to write those chips off against expenses as opposed to having to put them on the balance sheet. So it's the funding of it is important. They are all overspending or not necessarily overspending, but they're spending copious amounts. If at some point, it's like so many other things when you think railroads, undersea cable, the cable industry in particular, that capacity ends up being put to very good use, although the companies that put it in place may or may not benefit from that eventually. But the rest of us do, and business does, and the economy does in the long run, benefits from having that infrastructure in place.
Carol, thank you very much indeed for joining us. Really appreciate it, and have a great weekend.
Thank you. You as well. Thanks.
Thanks. Carol Schleif, Chief Market Strategist at BMO Private Wealth.